Hello, everybody, and thanks for listening. So, America's housing market is in trouble, has been in trouble. And I want to say before I even read this article, a lot of this article is going to point to the trouble that is causing it as being the COVID-19. There was trouble in America's housing market before COVID-19. So, let's start off by saying that. There was a lot of homelessness, and it still is. There were a lot of people complaining that the housing market, the houses, even here in some cities, metropolitan cities, the housing has gone up exponentially. There are also a lot of fees involved that I've noticed. Now, me personally, some of the experiences that I've had in dealing with talking to realtors and then other people who have expertise in the housing market industry before this COVID-19, what I've noticed, you know, the housing market has had a long history, and that it also involves racism. Some of us know about the redlining that is happening in some of these cities and some of these places where you could only live in certain neighborhoods. Well, I'm going to extend on that now. I think because this is a new generation, a newer generation of people, that some of that is still going on, but it has evolved. And so now you get discriminated not just only because of race. You can get discriminated because of a gender. You can get discriminated who you're married to or who you're not married to. Um, Based on what kind of programs you're involved, based on classism. If you don't have enough money or you don't look like the typical person that should be a homeowner, people that you deal with may have their own personal biases set up. So they may discriminate you, but it's hard to pinpoint all of those individuals and what case by case situation you're dealing with and who's got whatever bias. Maybe for example, they see that couples would benefit more buying a home versus somebody that's a single parent or a single income earner, or if you're a single woman. They may feel that a person of a different race should own a home rather than a black family, which was back back when they had redlining, which still sometimes will still be very persistent even today in the housing market. Some people will pick and choose that they rather deal with clients who have more money because they get a bigger commission at the end of closing costs. There's extra additional fees that they can partake in adding to your mortgage. There's a lot of things that are going on that you wouldn't believe that have gone on in the housing market that have equated to the reason why it's much more complicated for people to own homes. And then those who are able to actually get a loan for a home, by you having the means or maybe the money, you still may be paying a lot more than what you should, because now you're being swindled because they're having you to pay additional fees for, crazy things. There's a levy, and so they pretty much protect themselves as the people that are behind the scenes in the housing market, so that if you default on your loan, they're safe, guarded, but you aren't. And so this right here is a train wreck about to happen. So this right here is relating to the COVID-19. America's housing market is showing the first signs of trouble because of the coronavirus pandemic. So sellers appear to be holding off on listing their homes for sale in anticipation of less buyer traffic during a normally busy spring home buying season. So sometimes they say it's a buyer's market or it's a seller's market. Right now, it's a neither market, and it is not looking good because of this COVID-19. It's got a lot of people freaked out because in order for you to show your home, people have to come and view it, and people don't want people coming inside of their home, touching things. You don't know where these people have been, and then they don't know you, on the other hand. And so it makes it very complicated. So there's other things that people have done to show their home where they do like 3D viewing or they do videos, but it really doesn't give you the same feel as though as you driving up and parking, and actually they have a showing of the home, and you get to go and see the yard and see the front and back and the inside of the house and what it has or has not to offer. So March started out, this is a reference symbols right here up top so that you can see. I guess it has to do with the housing market and some of the organizations like Tree, Redfin, and NWSA, and Fannie Mac, and some of the other housing companies. So March started out as a strong month for the U.S. housing market, but by the second half of the month, the first indications that the coronavirus pandemic would weigh in on home selling activity began to emerge, according to a new report of Realtor.com. And so in the following weeks, ending March 21st and March 28th, the number of the newly listed properties fell by 13.1% and 34% respectively when compared to the same period a year ago. So Realtor.com found, so this is an indication that the home sellers may be holding off on listing their properties right as of now. So the pace of the home growth also slowed notably in the later part of the month, according to the report. So home list prices were only up 3.3% year over year for the week ending March 21st to 2.5% for the following week. So this represented the slowest pace of listing price growth since Realtor.com started tracking this data in 2013. And so there's more related articles about, the housing market and how this is being affected through this pandemic. And so our inventory and listing data can provide some early insight on how housing markets may be impacted by COVID-19, but the situation and reactions to it are still rapidly evolving. So this is evolving as times go by, whether it's getting worse, whether it's progressing to a point to where it could cause what they deemed it as a housing crash, or where it could turn into 2008, but maybe even worse. And so this is what they're fearing. The U.S., but they did say that they had put a freeze on the mortgage notes for about 12-month period, but still people are relatively on edge about that, because if people are not employed, if people are not working and not bringing in income, even though you halt their paying of the mortgage, at the end, you're going to expect that money. And so what do you do when that comes? And if people still are employed or unemployed, or they can't play catch up. So that is the growing fear. So the U.S. market had a good start to the year, but despite still limited homes for sale, buyers were buying and builders were building, she wrote. So the pandemic, the virus fighting measures appear to be disrupting the initial momentum of both the buyers and sellers adopt a more cautious posture. So real estate firms have taken steps to brace for an impact of the corona pandemic. So-called iBuyers, including Zillow, which is 3.628%, and Redfin, which is negative 0.815%, that purchase homes. And so it seems like it's ever changing. So that purchase homes from sellers and then sell them for a profit had wound down their home buying operations in anticipation of an economic downturn. So real estate brokers, including Redfin and Remax, had also shifted towards virtual home tours. And so that's what I was saying, where you would see the homes on like a screen and you can view them as if you walked in. But it's still not the same, because you want to actually be there and actually see what your money is going to get you. And so this had shifted to that, and so the open houses became verboten in the wake of the social distancing recommendations. So the other recent reports have shown additional signs of a slowdown in the housing market. And so Lending Tree released an analysis in Google also. You can see the numbers. I'm not even saying them. Search data analyzing the popularity of the search term homes for sale across the country. 50 largest metropolitan areas. Searches for homes for sale have fallen across 50 cities. So in this study, from the peak levels of 2020 thus far, Lending Tree estimated that the Google searches could drop 63% compared to the last year, of the impact of COVID-19's outbreak remains substantial for the next 2 months. So a drop in the web searches could presage a decline in home sales as well, because think about it, look what people are going through. You have to social distancing, you don't know, your future is uncertain. A lot of people have lost jobs. People who have homes right now are not really sure. They've been furloughed. They don't know where this is going to go, how long this epidemic, or it's actually not even, it's a pandemic, which now is even being called a plague by Donald Trump, that you don't know what the future holds. So why would somebody want to buy a home and then you don't even know if you're actually going to be able to be around to enjoy it? You don't know where this is going. So another sign of home sales that are slumping in this spring, mortgage applications. The volume of mortgage applications for loans used to purchase homes was down by 24% compared to a year ago for the weekend ending March 27th, according to the data from Mortgage Bankers Association. So that's in spite of the mortgage rates being near historic lows. So that was happening. The mortgage rates have went down really low, but now we have this pandemic. Comparatively, the volume of refinance applications was 168% higher than a year ago. But before the pandemic flared up, the U.S. housing market was on relatively a solid footing. So while the number of homes for sale remained low, constraining sales activity to an extent, demand among buyers was still quite high. So that was before this pandemic. So the lower mortgage rates had fueled an early start in the spring home buying seasons, with homes selling for 4 days faster than March when compared to 2019 levels, Realtor.com found. So the jump in joblessness claims has stoked concerns of repeat Great Recession. Yes, I said it, folks. The Great Recession could happen again, and a foreclosure crisis that precedes it. But housing economists argue that this is unlikely to be the case. I don't think so. Not the way this is looking, but we'll see. We shall see. So while housing led the recession in 2008 to 2009, this time it may be poised to bring us out of it. Mark Fleming, chief economist for the title insurance company First American Financial Corporation, wrote in a report this week. So unlike 2000s, the housing market in the U.S. is not overbuilt, Fleming argued, so making it less likely for a large swath of vacant properties will crater the home values for homeowners. So rising home values and stricter lending standards have also meant that homeowners are sitting on historic high amounts of home equity, and so the housing market will not go unscathed, as consumer confidence and a strong labor market are essential in the decision to purchase a home, Fleming wrote. Yet this time, housing is a casualty of a public health crisis turned economic, not the cause of the economic crisis. And so, and related articles, I'm not going to lie, it was a nightmare. A recovered New Jersey coronavirus patient urges caution and also hope, but the mortgage borrowers will be the first canary in the coal mine for a coronavirus-fueled foreclosure crisis, regulators say. And so anybody who works at this point deserves hazard pay. The working conditions that led one Instacart worker to strike. Okay, so these are somewhat articles to look for, additional articles. So, there still is a looming fear that the housing is greatly affected right now. There are people protesting that they want rent to be waived or they want rent to be delayed uh, for more than 90 days even. Landlords are just trying to pay bills like everyone else. Landlords are even also in a uproar. The coronavirus could hit mom and pop landlords hard as tenants miss rent payments. And so there's a back and forth pendulum on these issues. Mortgage buyers will be the first canary in the coal mine for the coronavirus fueled foreclosure crisis, regulators say. And so that is crazy. So you'll see some homes, even in Los Angeles, there's a lot of empty homes. And they're really pricey homes, and nobody wants to buy them. And the ones that are bought, um, you know, if they're not bought by people who can work from home and who make a substantial amount of income, there might be trouble ahead. Um, and it's still rocky because some of the businesses are closing down. So it's all interconnected, you see. So it's like even if you have a great job, if you're being furloughed or if your job might go out of business, the company, or if your hours are cut, or if you're not effectively able to do the things you were able to do at the office and you're at home and you have to try to transition your work to home and it's not as effective, could maybe decrease your income, whatever the problems that lie ahead could affect a lot of this. It all connects. And so this is the fear that they have in terms of a housing collapse. And so America's housing market is showing the first signs of trouble because of the coronavirus pandemic. So this was put out April the 2nd, 2020 by a Jacob Passy. And so what do you think about this? I don't know if it's going to be another foreclosure 2008, 2009 type thing, but this definitely points around us. If it is, it's not only affecting the housing, it's affecting the rental market. What I do know is that in China or in parts of Asia, they've slashed rents because they want to keep money flow and they want to keep people still a place to live and then also be able to hold up their end of what's going on. So I don't know if that's ever going to come here, ever going to come to the metropolitan cities, because that's what the arguments were. Is that's the reason why there was so much homelessness. And you have some buildings, even in the downtown area, where they relatively have a lot of empty units because they want it's beyond market rate. They're like luxury apartments and they offer a lot of amenities and sometimes they go as much as $6,000 or more a month. And so having said that, I'm going to let this video go. So what is your thoughts and feedback on this? It's like you can see to the side on the right, there's signs. We see this and it's happened in other cities where they say now leasing brand new apartment homes and the axes. And if you see these homes, they at the top of the roof, they have like a pool, they have a sauna, they have a gym. Inside, they offer some apartments. They even go so far to offer furniture. They'll have a bed. You don't have to buy any furniture. They have like a dishwasher. They have a lot of things that you don't even have to spend money on, but you are spending money because the rents reflect that, and you're basically paying like $4,000 is really low for something like that. You're paying like an upward of 6 and 7, maybe $8,000 a month, or more for units like this. And they have virtual showings where you can look online and see what they have to offer. It has a washer and dryer. It has like a patio. It may even have where you have your own little space where you can barbecue, and you might even have a lot of space where you can own animals, things like that. And you may pay no fee for your animal. You can have large animals, small animals. It has a lot of amenities, pretty much. The thing is that it's upscale living, and you get to see the skyline of like LA downtown, the high-rise buildings and the lights and whatnot, and that's what you're paying for, the big glass and the high ceilings. And so, with that being said, these are like condos and lofts, and then you have your homes that are in the areas, and they're just as pricey. And they may offer the traditional homes that have the front and backyard, and they have the breakfast nook, and sometimes they have homes that already offer like a washer and dryer, and they have like central air, forced air, and they have a lot of features that people love, and you're gonna pay even then some. And so there's hidden fees that I've learned that are involved. And so when you get done, you're not really owning anything. You're borrowing, and in a pandemic like what we're going through, a lot of people, are uncertain of the future. You know, um, how does one feel comfortable about actually spending that type of money when you've been furloughed, or you have job insecurities, or you're not sure if you're even going to physically, health wise, be able to maintain that type of environment because your health is threatened by this pandemic. And so that brings into a lot of questions of where is this going. Um, so this is like a train wreck happening. And so it has affected every sector of life in the US, this pandemic. And so, having said that, I'm going to let this video go. Like, comment, subscribe, and thank you for listening.